Right now, as you're watching this, something unprecedented is unfolding in global markets. It's December 11th, 2025, and silver prices have reportedly surged to around $63 per ounce levels we have unseen in modern trading history. We're talking about what analysts describe as roughly a 113% climb in just 12 months. But here's my analysis of why this spike is fundamentally different from typical commodity rallies. This appears to be strategic positioning, not just market forces. And when I studied historical patterns, I found three eerily similar situations. In each case, the dominant economic power faced a serious decline every single time. Let me walk you through what I believe China did on October 30th, why I think this matters to your daily life, and three critical developments you should understand before January 1st. That's just 3 weeks away. I'm not a financial advisor. This isn't financial advice, and I'm not affiliated with anyone mentioned in this video. This is purely educational analysis based on publicly available information. So, here's what reportedly went down. Late October 2025, according to multiple trade reports, China's Ministry of Commerce announced new export control measures on silver. Starting January 1st, sources indicate that silver exports will require government approval. We're talking about export quotas, licensing requirements, and what they're calling national security reviews. My interpretation: China now holds significant leverage over global silver distribution. The market response was immediate and dramatic. Reports suggest Shanghai silver inventories dropped approximately 40% within 3 weeks. Physical silver premiums in mainland China have reportedly skyrocketed. Some sources indicate Chinese buyers are paying anywhere from $108 to $128 per ounce for actual physical metal. That's roughly double the global spot price. In my view, this signals they're anticipating major supply constraints. Meanwhile, Western mints are reporting sellouts. London Metal Exchange inventories have reportedly hit multi-year lows. Major institutional players are demanding physical delivery instead of paper contracts. We're talking about orders worth approximately 350 million ounces. That's more than what many analysts estimate as the entire annual global surplus. Now, here's why this matters to you personally. Even if you've never invested in precious metals, your smartphone contains roughly half a gram of silver. Electric vehicles. Industry estimates suggest between 25 and 50 grams per vehicle. Solar panels use approximately 20 grams each. And here's the kicker. AI data centers powering tools like ChatGPT are among the biggest silver consumers in tech history. Each server reportedly uses specialized silver-coated components for heat management and high-speed connectivity. Some industry forecasts suggest the AI boom alone could consume around 200 million ounces of silver by 2030. Defense applications are equally critical. Missiles, radar systems, guidance computers. Reports indicate that the U.S. military consumed approximately 15 million ounces in 2024. Here's the concerning part. The United States apparently produces only about 14% of its domestic silver supply. Just 14%. The rest is imported. And here's what many people don't realize. Silver isn't just a commodity. It's a critical, strategic asset, essential for almost every advanced technology we rely on, from green energy and AI to national defense. What happens when the supply of that asset is suddenly controlled by a single geopolitical rival? Think about it. This isn't just about the price on a screen. It's about the very components that build our modern world. It's about the future of technology, energy, and even global security. This chain of events, starting with a bureaucratic announcement, could reshape supply chains and international relations for years to come. The three historical parallels I mentioned earlier show a clear pattern. When a nation weaponizes a critical resource, it's often a prelude to a much larger economic or geopolitical shift. The first parallel involves the oil crisis of the 1970s, when OPEC's embargo sent shockwaves through the Western world, revealing its energy dependence. The second is Japan's dominance over semiconductors in the 1980s, which challenged American technological leadership. The third, more recently, was China's control over rare earth minerals, giving it a chokehold on the global electronics industry. In each case, a vital resource became a tool of power. Now, looking ahead to January 1st, there are three things to watch. First, pay close attention to the official language and implementation details of China's export licensing system. Will they grant licenses freely, or will it be a trickle? Second, watch the inventory levels at major exchanges like the COMEX and the London bullion market. If they continue to plummet, it signals a severe physical shortage. And third, monitor the response from Western governments and corporations. Will they scramble to find alternative sources, or will they be caught unprepared? The next few weeks could be pivotal. The story of silver in 2025 might be remembered as the moment the world woke up to the fragility of its most critical supply chains. This is a developing situation, and I'll be tracking it closely. Let's talk about silver, because something big just happened that you need to know about. For years, we've known China doesn't actually mine the most silver. In fact, they only produce about 6% of the global mine output. But where they truly dominate is in the refining process. They take raw silver from all over the world, purify it into the industrial-grade material that powers our modern economy, and then they ship it back out. Or, at least, that's what they did until about 3 weeks ago. Now, I know what you're probably thinking. China wouldn't actually cut off silver exports, right? It would damage their own economy. It's got to be some kind of negotiation tactic. That's a common assumption, but I believe it might be a serious miscalculation. When I started digging into this, I discovered this exact pattern has played out 3 separate times in history. Same structure, same progression, and unfortunately, the same outcome. And based on my analysis, we've just entered stage 3 of this pattern. Let me break it down for you. There are 4 distinct stages that consistently appear. Stage 1 is dependency. This is where a dominant nation, let's say a global power, builds its entire critical infrastructure around a single, vital commodity. Their factories can't run without it. Their military technology requires it. They operate under the assumption that they will always have unlimited access to it. Then comes stage 2, weaponization. The country supplying the commodity suddenly realizes the strategic leverage they hold. They start to slowly restrict exports, maybe citing administrative delays or quality control issues. They're testing the waters, creating a slow burn scarcity to see how the world reacts, all while maintaining plausible deniability. Next is stage 3, crisis. This is where we are now. The restrictions get tighter, and prices begin to surge. Industries that depend on the commodity start slowing down production. The dependent nation scrambles to find alternative sources or substitutes, but it's too late. The timelines are too compressed, and the supply chains are already broken. Panic starts to set in as the reality of the situation becomes clear. Finally, we have stage 4, realignment. This is the end game. The once dominant nation sees its industrial power erode. Its currency weakens as its economic engine sputters. Its military advantages diminish because it can no longer produce key components. A new global order begins to emerge from the chaos. To show you this isn't just a theory, let me give you a historical example that perfectly mirrors what I see happening with silver right now. Let's travel back to around 1870, when Britain was the undisputed global superpower, controlling an estimated 60% of all global manufacturing. What happened next changed the world forever. Stay tuned for part 2, where we'll dive into that history and what it predicts for our future. So, what's option 3 for the United States? Build its own domestic refining capacity. In my view, this is the only sustainable, long-term solution. But let's be realistic. This takes years, maybe even a decade. You've got to get permits, go through environmental reviews, then there's the actual construction and testing. By the time that's all done, China could have locked in massive industrial advantages. Imagine a world where their AI infrastructure is superior, their green energy grid is more advanced, and their electric vehicle fleet is larger. The United States would be stuck playing catch-up, but with much higher input costs for everything. Think about the historical patterns. Britain tried to build up its steel capacity after becoming dependent on Germany. It was too late. Now, the The U.S. is trying to secure silver after depending on China's refining network. History suggests these timelines are getting shorter and shorter. So, what should you do with this analysis? I have 3 specific recommendations for you. First, you need to understand the timeline. China's export controls are reportedly taking full effect on January 1st, which is just 3 weeks away. I expect we could see silver prices potentially hit $70 per ounce by March, maybe even higher. If your business is in an industry that depends on silver, like electronics, solar, or automotive, you need to start factoring this into your planning right now, not later. Second, recognize the divergence that's happening. Physical silver and paper silver are splitting apart. Reports are coming in that Chinese buyers are already paying almost double the paper price for the actual physical metal. That gap shows a fundamental disconnect between futures, contracts, and physical reality. When that gap potentially closes in Western markets, and I believe it will, the price adjustment could be severe and sudden. Third, watch developments very closely over the next 90 days. If China follows through with strict enforcement in January, if global inventories continue to decline, and if more countries start hoarding their own strategic reserves, that would confirm we are locked into stage 3 of this crisis. At that point, the window for any easy solutions slams shut. Here's what I believe you need to understand. This isn't just about one commodity. In my analysis, China is testing whether the United States will respond decisively. If Washington does nothing about silver, I expect Beijing will move on to the next critical mineral. Think rare earths, tungsten, antimony, cobalt. This appears to be a systematic campaign to control the entire supply chain of the 21st century economy. Silver might just be the opening move. For 2 centuries, China watched the West control critical resources. They watched Britain dominate steel. They watched America dominate oil. And they watched the dollar dominate global trade. Now, they are potentially reversing that dynamic, starting with silver, then rare earths, and everything else that powers our modern technology. And the United States appears to be reacting late. An estimated 800 million ounces are missing. We've walked through the 4 historical stages. We're apparently already in stage 3. The pattern seems clear, and the timeline is established. The only real question left is whether you see it developing right in front of you. In my next analysis, I'm going to break down exactly which industries I believe will face disruption first. I'll talk about which companies might be able to survive this and the specific moves institutional investors are reportedly making right now that you won't hear about in the mainstream media. Make sure you subscribe and turn on notifications so you don't miss it. January 1st is just 3 weeks away. This story is just getting started.